It is Monday, the beginning of another trading week. This is Global Business Africa, bringing you insights into the ever-changing business landscape of the continent. From Nairobi to Johannesburg, from Cairo to Lagos, from the small businesses to the large corporates, we'll be taking you directly to the entrepreneurs making headlines. I am Penina Karide in the Kenyan capital, Nairobi. It's 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Coming up tonight, Egypt refunds Qatar's deposits as it seeks to break away from Morsi's past. Kenya bets on cheaper power to keep attracting investments. And later, we'll look at an entrepreneur who's taking traditional African prints to an entirely new level and for a good profit. So let's begin in Egypt, where the North African country has transferred $500 million to Qatar and will soon repay an outstanding $2.5 billion at the beginning of November this year. Qatar helped prop up the Egyptian economy in the aftermath of the unrest that ousted Hosni Mubarak in 2011 and eventually brought Mohamed Morsi to power. The monarchy, a strong supporter of Morsi's Muslim Brotherhood, provided some $7.5 billion in loans and grants during his year in power. If Egypt pays back the $2.5 billion in addition to the $500 million already paid, it will have returned all of Qatar's post-unrest deposits. Relations between Cairo and Doha have deteriorated since the election of the current president, Abdel Fattah el-Sisi. El-Sisi has allegedly led a crackdown on the Muslim Brotherhood that has seen hundreds killed and thousands imprisoned over the past year. Now, the Kenyan government is betting on bringing down the cost of electricity to keep foreign direct investments flowing into the country. The country last month suffered a double blow when multinationals Eveready and Cadbury announced they were closing their operations in the country in favor of Egypt to keep operational costs down. Kenya is on an aggressive campaign to switch off more expensive diesel-powered generators in favor of cheaper geothermal power generation.
Gazers throw hot steam into the air in scenes that characterize Naivasha in Kenya's Rift Valley. This has been the scenario in this part of the country for as long as it can be remembered, but has mostly served as a tourist attraction, the country unable to finance geothermal power generation. While this area alone is estimated to have the potential to generate up to 2,000 megawatts of power, Kenya generated just under 200 megawatts until this year, when plans were accelerated to more than double geothermal power generation in a wider plan to increase power generation for the entire country.
Typically, you find that the cost for geothermal will be about 7 to 8 US cents per kilowatt hour. The costs from a diesel plant, fuel alone, will be in the range of about 18 to 20 US cents per kilowatt hour. So you can see the difference, and why when you bring in geothermal and you generate from geothermal instead of from the diesel, then you have that effect of bringing the cost of fuel down.
So the significance of what we are doing is, more importantly, bringing down the cost of doing business, being a competitive destination, and being able to really compete with our neighbors who have previously possibly used the cost of power as a competitive advantage and been able to draw industry to their countries against Kenya taking that advantage.
Kenya has already released 210 megawatts of electricity from this latest plant, the Olkaria 4 geothermal plant, to the country's grid, and is on course to add another 70 megawatts in November. Already, Kenyan consumers have witnessed reductions in their cost of electricity, and the government is confident that this should drop up to 50% in under 4 years.
This geothermal 280 megawatts coming on the grid, we should be able to see a reduction on the use of heavy fuel oil to the tune of about $400 million every year. $400 million is some 40 billion Kenya shillings.
And to tap in further into the geothermal generation, Kenya has tended to construct an industrial park near the generation plants, targeting farms that need steam for their operations too.
So the idea is to have companies set up an industrial park here where we can supply them with electricity, which will be very reliable because it's not going at long distances. Because as you understand, part of the reason interruptions happen in factories is when electricity is transmitted on long distances and there are interruptions on the lines. But when you are close to where the power is generated, that is able to provide very reliable power. So that is one of the objectives of setting up industrial parks in this area.
Kenya has revived negotiations with Cadbury's, the multinational that announced its exit from Kenya in September, with a view of getting the company to reverse its move on the guarantee of a lot cheaper electricity. Susan Mungeli, CCTV.
Dangote Cement's Zambian subsidiary has sued the country's labor minister for defamation and slander after he accused an executive of the Nigerian company of attempting to bribe him. A row has been brewing between Zambia and Dangote Cement after the government minister made the allegations in September. Dangote said in papers filed in court that the minister had created an impression that the company was exploiting Zambian workers and enticing government officials with bribes during a tour of the plant in Dola, north of the capital Lusaka. Labour Minister Faxon Shamenda said a Nigerian executive seconded to the Zambian unit tried to bribe him at a hotel. The company described the allegations as malicious misinformation and denied the corruption and bribery claims. Right, so let's take you back to Egypt. That's our lead story this and the country has transferred $500 million to Qatar and will soon repay an outstanding $2.5 billion at the beginning of November this year. You may recall that Qatar had given Egypt $7.5 billion to try and jumpstart the economy. So let's get more now from Yasser Hakim. He joins us live from Cairo. So Yasser, Egypt has given back $500 million and plans to reimburse a further $2.5 billion. Where is it getting this money from?
It will be taken from the foreign currency reserves, which stand now at over 17 billion. And the government says that it has enough sources to hand over without causing any disruption in the current foreign reserves, especially that the central bank has issued bonds and treasury bonds and will be issuing more to cover the amount that will be given to Qatar.
So Yasser, Qatar had given a total of $7.5 billion. Some of it was in form of grants. Are there significant development projects that the country established with this money?
Now the government did not really make use of it in a way that it would bring in more money. It was given to Egypt at a time when there was no production, there was no projects, and Egypt needed the money to cover expenses such as payment to the income to the workers, such as the deficit for the budget deficit, paying for the subsidies on energy and food. So it's actually money that has been spent on sources and needs rather than projects that will bring in income. But what was controversial was the high interest rates by this loan, and this has been a major talking point with politicians and experts, saying that it should have been much less than the 4.5%. Usually these loans have a 1.5% to 1% interest rates. This one was at 4.5 to 5% interest rate, which was too high, and that's why Egypt wanted to pay it back as soon as possible. All
right, Yasser, we'll have to leave it there for now. Thanks very much for joining us. Yasser Hakim live in Cairo. Now, London-listed support services company Africa Oilfield Logistics plans to list its shares on Kenya's Nairobi Securities Exchange. The company, which is already listed on the alternative investment market segment of the London Stock Exchange, will sell up to 10% of its share capital by the listing and a private placement in Kenya. Africa Oilfield Logistics listing will be on the Nairobi Exchange's growth enterprise market, which concentrates on small, medium-sized enterprises. The transaction will officially make Africa Oilfield the first London Stock Exchange-listed company to join the Kenyan exchange. It will also mark a further step in helping the company expand its presence here in East Africa. The region has become an oil exploration hotspot after discoveries in Kenya and Uganda and natural gas in Tanzania and Mozambique. Well, let's get more now from Carl Esprit. He is the CEO of Africa Oil Logistics. He joins us live now from London. Thanks for joining us. So Africa Oilfield Logistics is listed on the alternative investment market segment on the London Stock Exchange. So why choose to cross-list on the Nairobi Securities Exchange?
Yeah, well, thank you for having me. Good evening there. Africa Oilfield Logistics is a Nairobi-based, Nairobi-headquartered oil support service provider in Kenya and the neighboring region, providing services to the East African oil industry. So it's quite natural that we would look to move to Nairobi for our cross-listing. In fact, we only look to list in London to access a mature capital market initially for expansion. But as a company, we always had plans for local ownership. And so with the government push to have more companies access the capital market in Nairobi, we saw this as a great way to fulfill these ambitions of ours.
Now, Carl, despite the ongoing oil boom in East Africa oil exploration, there is sentiment that local communities and investors are not reaping benefits. So will this move help dispel the notion that locals here do not benefit from the oil boom?
Yes, I think the industry in general and ourselves as part of the industry have very detailed plans in terms of local ownership of at a project level, local employment targets, etc. But more importantly, I can understand the frustration of Kenyan investors where there isn't really a way to get direct access to the oil industry in their own country. So we seek to provide that for Kenyan investors, a direct play listed in Nairobi, so that everyone in Kenya can share in this story within their own country and region of oil exploration.
Now let's talk about the recent developments in the global oil sector. Oil prices have hit a new 3-year low Monday, with some blends touching $84 and some cents. The market is projecting prices to fall even further, with some even punting for $80. At this level for the price of crude, does it make economic sense to continue investing in oil exploration in Africa, especially in view of the high capital expenditure involved?
Yes, and whilst we are always aware of the oil price, especially as it relates to the capital expenditure and operating cost budgets of our clients, we like to think of the East African oil and gas story as a multi-decade, really transformational story within East Africa. And we fully believe that the East African oil and gas story will move from exploration to production phase. And so, I understand investors looking at oil price and the reaction on the sentiment in the industry. We tend to look a bit longer term. If we think it's a multi-decade transformational story, then we need to think about a multi-decade view on the oil price rather than just small short-term fluctuations.
So what are the areas of Africa you active in?
Yes, so we have large operations in Kenya, Ethiopia, Djibouti, small operations in Mozambique, but really the whole region is of interest to us. So we have active business development in Tanzania, Uganda, the countries you mentioned earlier. But as far as Somalia, where there's exciting sounds of oil exploration happening, as we speak.
Now, Carl, there were reports of industrial action in this sector that has affected some players. Is that a problem from where you sit?
Well, I think any new industry in a country that employs lots of people always goes through a period in the beginning where there's education on both sides, from the companies as to what is expected, as well as the workforce as to what is feasible to deliver. And so there's an ongoing process of this education, negotiation, delivery, which we expect to continue not only in Kenya but the surrounding regions. So obviously it's something we well used to dealing with.
All right, Carl, thanks very much for joining us. That's Carl Esprit, the CEO of Africa Oil Logistics, live for us there in London. Now, a look at the markets. It was a mixed bag by the close of business today, with the AGX ending the day in red by about 0.5%. Still ahead here on Global Biz, we look at efforts by Cape Town to unclog perennial traffic gridlocks. And the International Bank of Somalia gets a SWIFT code, the first in the country.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact, if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Welcome back to Global Business. Now, key towns across Africa deal with traffic snarl-ups almost every day. In Cape Town, for instance, thousands of commuters sit in gridlock traffic as they slowly snake their way in and out of the city. Authorities are looking to change this by controlling the number of private cars on the road, as well as giving the transport sector a complete overhaul. CCTV's Travis Andrews with more.
The daily grind of rush hour traffic. It's something almost unavoidable anywhere in the world. Here in Cape Town, motorists find themselves bumper to bumper, mainly at peak times in the mornings and afternoons. The M3 highway is one of the city's most important road arteries, shuttling road users into and out of the CBD each day. An average trip of about 5 kilometers using this road takes the driver around 30 minutes each way. That translates into 240 hours a year of being stuck in the traffic. It's something the city's transport officials are acutely aware of.
There are parts of the city where we do need to address a lack of capacity in the roadway, and we have plans to unblock those particular hotspots that we call them. And of course we are also working to move freight from road to rail, to take freight transport off the roads, which will also help with the congestion.
While billions have already been spent on road infrastructure upgrades thus far, thousands of new drivers and vehicles also join the growing number of road users, further compounding the congestion problem. But the city believes they may have found a sustainable solution to reduce high traffic volumes, and have rolled out the bus rapid transport system that travels exclusively on its own road lanes.
We have prioritized public transport, and so much of our work is geared towards moving people from private car to public transport. We've rolled out a relatively small footprint in the My City project, but what we are seeing is a significant uptake from our residents and our commuters.
The My City bus rapid transport system is already playing an integral part in unclogging the city's busiest roads, cutting travel times by half, and the service is already gaining a significant following with fed-up road users.
My City is the best form of traveling in the mornings because it's a quicker access to town in the mornings.
Coming to town, most of the routes you get express. And it's all about, you know, when you come to work, you don't want to be out in the traffic.
We leave the car because you drive a car from your house and then there's a park for My City. We park our cars and then we take My City. We drive to Cape Town, from Tableview to Cape Town.
Cape Town, though, continues to enjoy a reputation as a laid-back city. And so highway congestion levels are nowhere near that of other bustling African cities. But those on the road, though, still want it as free-flowing as possible. The city's transport officials are hoping the confidence being shown in public transport will lead to more and more people ditching their own vehicles and in turn freeing up the highways and making life a lot easier for road users. Travis Andrews, CCTV, Cape Town.
International Bank of Somalia has become the first lender in the country to handle foreign transactions, the latest sign that the country might just be stabilizing after decades of conflict. The bank's chairman, Hassan Ahmed Yusuf, says the institution obtained a SWIFT code that enables lenders to carry out international money transfers. IBS is taking advantage of increased stability in the capital, Mogadishu, after the success of African Union-backed Somali government forces against Al-Qaeda-linked Al-Shabaab militants. Al-Shabaab has been in retreat in Somalia since its fighters were forced to withdraw from Mogadishu in August 2011 after a series of military defeats.
The International Bank of Somalia is a bank just like any other bank in the world and provides services such as foreign investment, long, medium and short-term investments. It's a bank where customers can gain profit for their deposits.
Avic International Holding Corporation has begun constructing its African headquarters in Nairobi in a bid to stamp its presence in Africa. The new building will be the gateway to the continent and is expected to add to employment opportunities in the country. Avic provides services that touch on aviation, trade and hotel management, among others.
Avic International Holding Corporation has officially begun building its African headquarters in Kenya's capital, Nairobi. The project costs around $500 million and is being built on a 7-acre piece of land west of the capital.
In the effort to scale up our engagement and investment in Africa, by coordinating our businesses on this continent, effectively expand the markets and achieve a greater localization, the company has taken the decision to establish its Africa headquarters here in Kenya.
Avic International already has more than 15 subsidiaries across Africa and employs over 2,000 people. It has operations in aviation, trade and logistics, consumer goods, real estate, hotel management, technology and resource development. The new headquarters will serve as a gateway to Africa as the company seeks to increase its presence in the continent. Kenyan government officials welcomed the move, citing it will increase trade ties between the two countries going forward.
Today's ceremony marks the beginning of another illustrious relationship in Nairobi City County and the Kenyan government, and I look forward to working very, very closely with Avic.
The Kenyan government is undertaking major reforms to facilitate the investors into this country. You've seen major reforms and major investments in infrastructure, in terms of the right environment for investors.
Trade between Africa and China has surged over the years, with education, infrastructure, consumer goods dominating the scene. Celestine Karone, CCTV.
A quick check at the commodities this Monday. The price of crude oil fell to a new 3-year low on Monday as a split between the world's most important producers and how to share the pain of low prices becomes increasingly apparent. A Reuters report suggests that Saudi Arabia was willing to accept a price of as low as $80 a barrel for the next a year or two in order to defend its share of the global market. Now, it should be good news for economies which are heavily reliant on oil imports. However, it could make life more difficult for exporters who rely on income from oil sales. Still ahead, we'll look at an entrepreneur who's taking traditional African prints to an entirely new level and for a good profit. Welcome back. A few years ago, traditional African prints were only used as work attires in the African culture. The tradition started changing as people began using the prints for weddings and special occasions. Today, many want African prints on just about anything: shoes, bags and other products. On Grassroots tonight, we hear from South African designer Maria McCloy, who is cashing in on the demand for these prints and stamping her place on the fashion industry.
Bright colors of traditional African prints are selling like hotcake in Johannesburg, South Africa. Designer Maria McCloy says customers want the prints on everything: bags, clothes and even shoes. McCloy says the market is lucrative.
3 years ago I had this idea, why don't I put this cloth, which before I'd always used around my waist and on my head, why don't I put this beautiful cloth onto shoes and clutches? Because everyone wears shoes and clutches, and my philosophy really is like, take African aesthetics and African design into life. Don't just use it for weddings and special occasions. Let's wear it everywhere. It's sexy, it's beautiful.
The process starts with choosing a fabric. Then look out for an outlet where it can be sewn on shoes or any other plain colored product.
Maria brings the fabrics to us, and what we do is we work with the local factories and we realize her vision, where we take her fabrics and a little bit of our input and we come up with a great concept. Again, she's the designer, so everything passes through her hands for final approval.
Having switched from a shoemaker to a factory, McCloy has been able to up her production to meet the growing demand.
There's been such a positive response to the African print shoes and clutches, and now my production is perfect. I really can grow my business and meet all the demand in South Africa, in the rest of the continent, and also around the world.
We sell African print here at Bagandi Fly. We promote African designers. Maria's clutch bags and shoes go very well with the things we have here in the store because she's African and she uses African print.
I think they're pretty awesome. The vibrancy of the colors, the boots and the pumps are stunning. And I think they go with any outfit. You can dress them up, you can dress them down. And I think the clutches are awesome. I mean, every lady needs a clutch where you can put everything in. Your car keys, lipstick. So I think it's awesome.
Once McCloy has finished her creations, she uploads the photos on Twitter, Tumblr or Instagram and Facebook. Her creations also feature in top African magazines such as True Love, where she is able to tap customers from all over the continent and around the world. Noor Mwakugu, CCTV.
And before we wrap up, a quick check at the currencies. The Nigerian naira firmed against the dollar on the interbank market Monday, gaining almost 0.5% after state-owned energy company NNPC sold an undisclosed amount of U.S. currency to lenders. Now, you may recall the naira has been slipping since last month, of course, weakened by falling global oil prices and low inflows of hard currency into Nigeria's debt and equity markets. Right, so on Global Business tomorrow, some businessmen in East Africa panic after the community extended its free trade area to Egypt. We'll be examining their concerns. And we'll also be looking at Uganda's efforts to unlock traffic gridlocks in its capital, Kampala. That's it for now on this edition of Global Business. Remember, you can send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa. Also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.